Hey, what is happening, Bulls and Bears? You're watching Bull Boom Bear Bust. My name is JJ, and we're back with another dose of economic reality as we continue to document the economic decline, the economic collapse, which is happening right before our very eyes, but it is happening in slow motion. But signs are everywhere that economic conditions are deteriorating very rapidly. First, let's start right here. CVS plans to axe 5,000 jobs in a once in a generation transformation. CVS, we must take difficult steps to reduce expenses. I wonder how much of this has to do with all the stealing and looting in their stores. I think that's a big part of it. CVS says cutting a number of non customer facing positions will benefit the company. CVS says reprioritizing investments around care delivery and tech. And this was reported out of the Wall Street Journal from the article, quote, the company on Monday said in a statement that the jobs affected are primarily corporate positions. CVS said it doesn't expect customer-oriented roles in stores, pharmacies, and clinics will be affected in the layoff plan, unquote. So some of the upper level people, not the people working the cash register or stocking the shelves, working in the pharmacy, but some of the office personnel and maybe upper level management people are getting laid off. And it's going to be interesting to see where these people are going to find new work when you have other similar companies like Rite Aid, Walgreens, pharmacies, and stuff like that also not looking so good when it comes to how their stores are being looted. Now, every time we look at other countries, every time we try to look at the statistics here for crime and economic conditions, we see countries that undergo economic collapse, crime surges. And it's no coincidence, that that's happening here in the U.S., where we see now companies and stores locking up more things behind encasings and glass, glass protective glass encasings. So it's going to get worse, and not much is going to stop it. So this economic situation is not going to be resolved until we hit real crisis levels, and until a lot of people start waking up and realizing, what's happening, and that they've been fed, pretty much a line of BS, from a lot of the news networks that don't really talk about how dire, the economic situation really is. Now, in these times where the economy is undergoing a slow motion collapse, where debt is exploding, both household debt, city state government debt, federal government, everything is exploding, and national debt. There's still opportunity for those that are aware, for those that are prepared. That's why I think a lot of us here that are really paying attention to this are probably going to profit, because if you are wise, you're going to have money, you're going to have cash on the side. So if you find some buying opportunities, if we see any of these bubbles burst, maybe you're going to scoop up some cheap real estate. But if we don't see that, if we don't see massive crash in prices somewhere, if we continue to see rising costs of living everywhere, then you're going to have investments that are going to go up with that. So I think precious metals is a big part of that. But anyways, those of us that are positioned well, I think will do, actually probably benefit from this economic collapse. I know back in 2010, when I bought a home after the housing market dropped out here in San Diego, that was a blessing for me. I probably would have never gotten a bigger home. I was in a small condo, but I actually got a single family home at that time. And if it was for the blessing of the economic, what we call the financial crisis now. And I looked at it as a blessing at that time because I knew it was coming. That was before I put out videos and started even talking about the economy. I just always followed these things in the newspaper, even back before all these financial websites were created. I used to read about the interest rates in the newspaper. Remember newspapers? You used to look through those, and you had to go get them delivered. You go to the store and buy them. Anyways, I used to look through there at the business section a lot. Then, of course, internet was around back then, but it wasn't as just as much as it is now. Now it's like 1,000 times more information that you can get versus what you could get back then. But my point is, even back then, I knew things weren't normal, and that there was going to be some sort of reckoning for all these people buying homes with zero down, adjustable rate mortgages. You know the story, the subprime mortgages. Saw home prices double and triple here in lots of different areas in San Diego County. And I knew it was just a matter of time. So I was sitting patiently on the sidelines. Now, those sitting patiently here today are really feeling like they missed the boat. They feel like prices are never going to correct. So that's the real tough part, is the timing of this. And, we're going to have to keep an eye on it. We'll talk about real estate more here in just a moment. But let's tie it in a little bit here. Whenever I read about layoffs, I think about how many of these people getting laid off had a 30-year mortgage, right? So it's interesting when you go apply for a loan, they're going to look back at your employment history, your credit, payments, etc., as if having a job over the past few years means you're going to still have the job over the next 30 years. So it's pretty interesting how mortgages have been put out to 30 years. That's just in my opinion, that's always been an enormous amount of time for something to be paid off. And think about how much lower prices would be if it were not for the 30-year mortgage. And by the time that mortgage is done, you end up paying about triple of what the home is worth. So on a $200,000 home, you're going to end up paying about $600,000 by the end of the 30 years when you look at the interest. I'd have to do a calculation. It could be even worse now with the higher mortgage rates. But my point is, people are being bled over many decades, bled from being able to save up more money. So it's very interesting. Let's talk about real estate next, since I already kind of tied it in here with the layoffs and CVS. And we have some home price predictions out in the news, and these are always interesting to look at, aren't they? Morgan Stanley housing analysts expect home prices to hold steady in 2023, but begin dropping next year in 2024. We forecast home prices in 2023 to finish the year flat versus 2022, before falling 2% in 2024 as affordability continues to adjust slowly back to long-run averages and inventories begin a slow climb off multi-decade lows. That's the end of the quote there from the Morgan Stanley analyst. 2%, that's not a very aggressive call for a home price correction. I don't like to make certain predictions because things can change in a heartbeat. They can cut rates. They can come out with some new mortgage programs to get even people with terrible credit scores into a home. You know what I mean? But I have to say 2% is way off target. I think it's going to be closer to 4 and 5% nationally. Now, that doesn't mean there's not going to be cities with home price growth, and it doesn't mean there's not going to be other cities with bigger drops than between those percentages, maybe 10% in some cities. But overall, when you average it out nationally, I think 5% is more of a realistic target. There's just too many people over leveraged. A lot of people went out and bought homes just in the past few years with the whole crisis and the FOMO and the urgency to buy a home and relocate with the work at home thing. So we've yet to see that play out. A lot of people getting called back to the office. This is really happening in slow motion. Even today, people that ended up working at home are still finally getting called back to the office from when so many companies sent people home because of the health crisis, right? So things are playing out. The moratoriums for people not being able to get to be evicted, and those things are ending in some cities still. I mean, a lot of things from 2020 are still being unwound. Even as of today, look at the student loan cancellation or the freeze. Students are finally having to pay back their loans, and there's new information on that coming out all the time. But my point is, a lot of things that happened in 2020 are just now being reversed or ended finally. So we'll have to see how this plays out. But what's your prediction on the home price correction, or will there be no correction? Please let me know down in comments. What do you see the rest of the year here? 5 more months approximately. And also when it comes to real estate, I see Airbnb as a big part of the correction. A lot of millions of Airbnbs are out there, but when the middle class, the working class is no longer able to do that discretionary type of spending, when they're not able to spend for leisurely things like vacations, I think a lot of Airbnb owners are going to be in big trouble, considering the surge in people that went out and bought just in the past few years and the prices that they paid. For now, while people still had money, um, it was good, good investment. A lot of people still taking vacations and doing a lot of things, but we're seeing that all slow down now. I just saw an article how RV sales were plunging, and what happens when sales plunge, prices plunge afterwards. And maybe not plunge is the right word, but they're definitely declining. And the same thing with real estate. We see sales really dropping off a cliff here, and we think that prices are going to be soon to follow, just like it always happens. First it's sales, and then its prices follow. And how bad are home sales? Well, housing, June home sales dipped to the slowest pace since 2009. That was as of June. What's today, August 2nd? We don't have the July numbers yet, but we know the June numbers are pretty awful. Sales of previously owned homes dropped 3.3% in June from the month prior to an annualized rate of 4.16 million, according to the National Association of Realtors. They said that on Thursday. June home sales were 18.9% lower compared to last year. This is the slowest pace for the month of June since 2009, and lower than the 4.3 million unit sales predicted by economists that were polled by Bloomberg. So once again, the economists were incorrect. And how big of a price drop will we see? Well, it depends on a lot of factors. But we've got Jerome Powell out there now talking about keeping rates higher for longer and possibly even more hikes. But he is being very persistent on saying we need to fight inflation, fight inflation, fight inflation. And they're not to their 2% inflation target. So it's going to take something big and wild and crazy to happen, in my opinion, for the Fed to cut rates. But something big, crazy, and wild could happen. Just again, look at 2020, where they cut rates, record amounts of money printing, stimulus, rescue programs for the hundreds of millions of people that are living paycheck to paycheck, because it only takes one or two missed paychecks and people are having to beg for money because everything is just so darn expensive. All right, let's shift gears a little bit here. Still on the topic of lending, the cost of living, housing. Let's talk about banks. Banks are still losing deposits, and it's not just the small and the medium-sized banks, or what people call the regional banks. It is the big guys here. JP Morgan, Bank of America, Citi, Wells Fargo, the four biggest banks by assets gave up another $262 billion in deposits when compared to a year earlier. This was from the first quarter to the second quarter of this year. Customers pulled out $62 billion from three of those banks. Many regional banks, meanwhile, gained deposits back. Investors rewarded them for it, sending their stocks higher over the past 2 weeks. So things aren't playing out exactly like it was expected. It was expected that the people would be afraid to keep their money in the smaller and the regional banks and go to the too big to fail. Now, initially we saw that, but now we're seeing more money come out of the big four mega banks. And I think a lot of it is not just people are scared about their money being safe. I think people want alternate investments. I think people are going into hard assets now, maybe gold and silver, maybe both. But I think that's part of the picture. But there is that level of fear out there where people just do not trust the banks like they used to. The deposits being lost has lessened compared to when the three big banks fell back in March. And then April, May were bad months. It's not as bad as that, but when we look at it year over year, banks are still much lower than they were. All right, let's shift gears a little bit again here. Another sign of severe economic contraction happening right now. The JOLT job openings report. Strong jobs is a myth. Job openings dropped to 2-year low as the number of hires and quits plunge. So for a while we saw this big trend where people were quitting. There were terms thrown out there. What was it? The walk away and the Great Resignation, and that created a lot of job openings. Well, what happened when people filled those vacant positions is it got counted as job growth. It got counted as jobs added, even though it was just filling a position that somebody left. Um, and they had to fill the vacancies, of course. So, but they used that as strong data, and people looked at that and said, "Wow, the economy is really good. It's really strong. Look at all these job openings." Well, now reality is starting to hit. Less people are quitting their jobs. We're not seeing the Great Resignation like we did see over the past few years, and the number of job openings has plunged also. But it's not just because people aren't quitting as much; it's because companies don't need people like they used to because the economy is undergoing a severe economic correction. According to the Bureau of Labor Statistics, the areas that were the strongest and had the most openings were in healthcare, social assistance, and state and local government jobs. I think pretty soon everybody's going to be working for the government at some point. Excluding education, job openings decreased the most in the following: transportation, warehousing. Speaking of transportation, we saw Yellow Truck Company filing for bankruptcy. That should tell you what's happening with the economy. Warehousing and utilities. It shows you that the demand is not there like it used to be. When you see trucking companies go under, yes, they also had a big debt problem, like many companies. They carry a lot of debt, corporate debt. It's a monster, and now at these higher rates, they're not able to roll that debt over like they used to, and we're going to see a lot more corporate bankruptcies. And we've been keeping an eye on that. Right now, we're on pace for the worst year since 2010. Add the Yellow Trucking Company as another one, and we're going to come up with those numbers, I think, later this week to give you all an update on that. But corporate bankruptcies going to explode. Everybody will need to brace, be prepared for this, and I think we're going to get through this just fine. And like I was talking about earlier in this video, I think we're going to be able to profit out of this madness. All right, folks, so we're going to wrap it up here. One thing I want to mention here, I mispronounced a word a couple reports ago. This was decoupled. I said something had decoupled from something. I don't know what I was talking about, but a lot of you let me know down in the comments. I had said decoupled. I think I was reading off of something. And, sometimes spellings of words don't look like they're supposed to sound, or they don't match the sound. I think that's what I was doing. Anyways, decoupled is the proper pronunciation. So every few months, you guys get me on something like that, I like to come back and talk about it. It's always very interesting how the pronunciation of words, So decoupled is the proper pronunciation. Also, a couple of you are asking about the outro music. Yes, I don't put outro music on the channel anymore. Why? Because I'm actually releasing the songs, and that's a side hustle that I do now. So basically, you get streams and stuff like that. People listen to the songs. You get paid a little bit. You got to have millions of streams to make any money. But anyways, if you want to look up my songs, they've got words to them now, lyrics. I do cover songs. The artist's name is Noise Critter. Just search that on your favorite music listening platform. Also right here on YouTube, I'll put a link down below. Noise Critter is the artist's name. That's one of my side hustles. I've got a few side hustles. And if you want to check out some of the songs, I'm going to be releasing more here. I've even got 2 cover songs out there. I've got a Coldplay song, an acoustic version, and I can't remember which other one I put out there. I've got a bunch of them recorded. I just haven't released all of them. So anyways, links down below. You'll see what they are. And some of the songs you've heard on this channel before when I used to play them at the end of the program. But now I can't because I'll probably get nailed for my own songs being out there in the music world. Anyways, everybody, thanks for watching. Big love. Keep stacking. Bye for now. Peace.